what can we expect from the FOMC, and how is that going to guide the Asian markets as we close off 2017?
It's baked in. I don't think it'll have much of an effect at all. I think the market's already there. The question's going to be in the commentary, and we think that there's really clear signs at the moment that the market is under pricing inflation, and that the Fed may well end up sticking to their dot points and surprising the market in 2018.
I entirely agree with you. I think the market is completely mispricing the Fed, but we're predicating that, Mark, on inflation making a comeback and making a strong comeback. Do you think it's going to arise in 2018? And do you think we're in for a nasty surprise from inflation causing the Fed to move more aggressively?
Yeah, I mean, there's a very interesting number. It's the New York Fed use it. It's the underlying inflation gauge. And it was built in response to trying to get a better handle on inflation in the US, and it's been noticeably ticking up. And we also note that in certain sectors, companies that are particularly exposed to inflationary impacts have been moving higher. We don't think this is going to be a big inflationary burst, but it's more the fact that everything's priced to perfection. And we think that the debt markets in particular are going to be very, very exposed. And that eventually will transmit into the...
Right. Mark, and so if we do see the Fed in the dot plot, and I think you're quite right to allude to that, the path of rate increases in 2018 suggest 3 or 4 rate hikes next year, then is the market going to throw a wobbly at that, or can it absorb it?
Yeah, we think it'll have a little wobble, you know, 5% down, 7% down, that sort of thing. But the underlying economic, so then you've got to go back and look at the other side and go, well, why has it been so strong? Because the global economies have finally resynchronized, which is a big point we've been talking to clients about. And we've also seen, you know, you look at PMIs and LEIs around the world, they're extremely positive. And in regions like Asia, you know, capital restocking has been very, very aggressively pursued. The Tankan survey in Japan is back to 90 levels. So you know, it's all very well saying, oh, we're worried about the market's gone very hard. Yes, but the economic framework is exceedingly attractive. The Fed being a little bit more aggressive is a byproduct of that. Right. And what it would do, though, is presage the end of this market cycle, but we don't think it's 2018.